All right, welcome everybody. Shane Carter here, Hampshire Capital. With us as always, our VP of Investor Relations and Operations, Eddie Austin. What's going on, Eddie?
Man, I'm doing well today. And before we started this, we got to talk about an exciting subject. We needed to back up and start recording because we're talking about forecasting. And, you know, as we're operators, we sit in the operational seat of our multifamily assets. You know, it's always good to have like a snapshot or a forecast on what the future looks like. You know, everybody talks about this crystal ball that we're really looking to peer into and find out. Nobody really has the right answer. But if you are in the ownership seat and you are in the asset management seat, I think that you can kind of create your own crystal ball and look at forecasting. And yeah, it takes a little bit of work. It takes a look at some spreadsheets and looking at different things, but it's actually fun for me. I'm a numbers guy. So it's something that you can look at and maybe something that can help somebody else in the space. So real quickly, let's talk about forecasting from a high level.
Yeah.
So looking at a pro forma, you know, when we buy a property, a brokerage company, a BOV would be created on pro forma or the physical asset value and the pro forma moving forward. Well, what does that pro forma mean? Well, they're basically taking what they believe is rent growth and what they believe is the NOI and where to be with debt service. Not always correct, but they create that pro forma based off of gross income, vacancy, and then down at the bottom, what the debt service would be. And they can give you a pro forma of what it's going to look like. So that's not what you would want to use for your actual property because your vacancy could be different. Your income could be different. And also your leasing team. So let's look at all the little first things first. So the very first thing, you would want to have a very good understanding what your property management company, what the leasing velocity is. What I mean by velocity is if you had 5 units move out today, how fast can you get those people back in there? So what is the velocity of the leasing team? Are they 1 or 2 a month, 3 a month, 5 a month? So you can kind of know that the leasing team can fill 5 vacant units in 1 month. So if we understand that metric, the second one we need to look at, and another one that's very important not to get too deep into it, is days to revenue. So if you have a move out, how long does it take from the move out phase until the unit is rent ready? So in that rent ready phase, we call that days to revenue. So let's not even talk about renovations. Let's just say we're taking a classic unit, we're moving that out, we're moving a person right back in. We'll talk about renovations on a different one, different video.
Yep.
So if we just have a classic unit, most of the time you have a move out, you have a trash out. So you're going to go in there, you're going to clean this unit out completely. You're going to touch up the scratches on the wall, maybe replace an interior door or something like that. Just real quickly touch it up and get it ready for another person to move into it. So those are your, how long does that take? Okay, so we know it takes 5 days to get that unit rent ready again. Hopefully, it's probably 10 to 15, we hope. And then from there, how long does it take a leasing team to rent that unit? So with that said, we can look at the rent roll and actually take the rent roll and we can see that, say in November, we have at least 1 or 2 people moving out every week for that entire month. So if we take that, you're talking about 6 to 8 people that will be vacant units. And now you could also look at revenue or renewal rates. So what's the probability of a renewal? So getting that, you want those people to stay in that same seat. So if we do that, then we know that the team is really good at renewals. So we're probably not going to have to deal with that. You know, we're just going to change the rent for them and renew them and put them right back on a 12-month lease. And that's the best case scenario. That's perfect. But if we have a move out, you have that days to revenue window there with trash out and painting the unit and getting it rent ready again, move in ready. So you have those calculations. So if that's 5 days, you know you're 15 days less than the month already. And then your leasing velocity, if you threw 8 people at your leasing team today, and they're only doing 2 to 3 move-ins a week, you know you're probably looking at a full month.
Yep.
You hope. So that's kind of what we call it, forecasting and building a pro forma. And then the second thing we touched on was the expenses. So we understand the actual hardcore key metrics of the leasing side of the business, the rent roll side of the business. The next one we always want to do is optimizing expenses. You can kind of take your current, if you've owned the property for a year, you have a T12. You can look at that T12 and you could see what electrical went up, you know, what gas and sewer, how that went up, and what that does across the board. So it's fine if your tenants are paying their electric bill and water, gas, and sewage, that's no problem, but you still have a house meter that you got to look at too. You still have a trash component, a physical trash component. You got to pay for the dumpster. The tenants ain't paying for the dumpster.
Mm-hmm.
You know, they're probably paying for valet trash or, you know, door level expenses. So you still have property level expenses. You need to look at how those are increasing to figure out, you know, what's that snapshot? What's that forecast going to look like? So you can say, well, look, you know, we're increasing rents at this number, but expenses are going at this number. You can kind of build that out and say, oh man, they're starting to separate.
That's right. Yeah. I mean, look, at the end of the day, it's all about driving NOI growth, which is a function of, you know, forecasting how do we grow our income and how do we reduce our expenses. And, you know, we can take deep dives into all of this, right?
Oh,
like we talked about, we're going to have a whole deep dive on insurance alone because that's such a big topic in the market right now. But, you know, back to your point, what, you know, you should always have that forecast. And yeah, you've got that pro forma from when you bought it. But let's say you look up in a year and you're not on pro forma, but wherever you are, you need to figure out where am I and where am I going? How am I getting there? Right. And that's where this forecasting technique and tool comes in that we do, you know, from an asset management perspective on every asset. And so you need to be able to understand, hey, we're you know, let's say, for example, we're under where we expected to be for vacancy. You know, we had some additional delinquency and bad debt we didn't plan on. It is what it is. Here's where we are. How are we getting to where we want to go? What is the plan? What is the trajectory? And what are those key performance indicators that we need to track and we need to be able to tell our site staff they need to be able to hit on a weekly basis to be able to get us from A to B over the next 2 months, 3 months, whatever that runway is to get from where you are to where you want to go. And then on the expense side, you know, it's the same thing, right? It's drilling into every single line item and understanding where are we trending, where have we come from, and where do we have opportunities to diminish those expenses, and really looking hard at each one and spending the time to work with the companies, the contractors, the vendors, and sometimes it's even changing those relationships to get better deals so that you can lower your trash expense, lower your landscaping expense, lower your utility bills, and really drive those expenses down.
Yeah, absolutely. And I mean, you know, one thing for sure, you mentioned, you know, sometimes you need to change a contractor out or something like that. You know, we've talked about this in construction management, I believe, but you really have to manage those vendors, or your property management company needs to manage those vendors because they could be creeping up on you.
Yeah.
You know, they're just adding more and more, and, you know, they're still mowing the same grass every single month, but because gas went up 25%, they're going to probably tack on some more expenses because maybe they evaluated their expenses.
Right.
And said, oh, we got to charge more because we were charging for $2.50 a gallon for lawnmowers and it's at $3.50.
Right.
You know, so they are probably going to do the same thing and they might creep up your expenses as well. So it's just always a good thing to just go through it and get a good forecast of what it looks like in the future, because everybody talks about they want to look in that crystal ball. Well, you actually do have the tools available to you to do that.
Mm-hmm.
And I will mention this. We use a tool called Lobby CRE, which is a great platform as an owner group and an asset management group to really look at different KPIs. And you can structure those dashboards in multiple different ways. And you can look at that at real time. You know, RealPage and Entrata and different companies is feeding the data into this platform. And you can get on there at 1 o'clock in the morning. You know, if you're worried about it, had a bad dream, and you can actually get up and look at that to see what those KPIs, where your trends are. And it's a really good tool. So
powerful. Yeah. And it's constantly pulling real-time data.
Yes, absolutely.
So it's great. All right, buddy. Well, I think that was a good enough top level. I mean, look, we'll save the asset management series for drilling in on each one of these things, but I think that was a good top level of understanding, how to do forecasting in terms of asset management.
Yeah, I mean it's a really hot topic today. Asset management is really key. With you can see all over the news all the time. You see multifamily recalled, and you just never know. But one thing for sure, you can forecast this stuff yourself.
You can.
As an operator at any point in the company, you can just go through and look at a rent roll. You can look at where you are today, and you can give yourself a pretty good scenario of what things are going to look like. And they say hindsight's 20/20. Well, it doesn't have to be hindsight. You might have a million ideas of what you could have done. Well, you can probably have some pretty good ideas about what you're going to do.
Yes.
I would recommend do not react to asset management. You need to be proactive. Being
100%.
proactive means forecast.
That's right.
Forecast, look forward, see what things are trending at, see what your leasing team velocity is doing, see where your rent rolls, your move-ins, your move-out, and what's your days of revenue? How long does it take you to turn a unit internally?
Absolutely. You got to have all that dialed in. And look, I think the biggest message here too is that you are where you are. And if you don't know where you're going and you don't know how to get there, you're never going to get there.
There's no destination.
There's no destination.
You don't know where you're going.
And that's why continuously forecasting and updating in real time where you are and where you're going, even when things are going well, it's important to stay, okay, here's where we are. And here's where we're going, and continuously map that so that you can see whenever you're potentially veering off of the right track that you're on. So critical stuff. As always, buddy, really appreciate it. And we'll definitely see you on the next one. Everybody like, subscribe, let us know what y'all want us to talk about. We love this stuff. We live and breathe it every day. And we'll be happy to come up with any topics that you want to hear us talk about.
Make sure you give the channel the thumbs up and then hit the little notification bell so you know that when we got to upload a new video, you can stay up to date.
Thanks,
guys.
All right. See you on the next one.